Hello, welcome back to the InsTech podcast. Zoya podcast producer here. This week, we have an insurance grandee, to quote Robin, on the podcast. Joining Robin is Accelerant's CEO and co-founder, Jeff Radke. The conversation covers what it means to build a global risk exchange that connects specialty underwriters, such as MGAs and MGUs, with capital providers through a modern, transparent platform. But Robin and Jeff also reflect on the current state of the market. Since its last appearance on the podcast 3 years ago, Accelerant has grown to serve over 200 underwriting teams in 20 plus countries. This episode is a quite nice bridge to the last conversation, which will of course be linked in the episode notes below, as Robin and Jeff touch on just how far the industry has come. It's not easy to see when you're in it, so take a step back, contemplate, and let's dive into the conversation.
Welcome all. On this week's InsTech podcast, I have the genuine pleasure of talking to an industry grandee in the form of Jeff Radke. He's the co-founder and CEO of Accelerant. Jeff, welcome.
Thank you, Robin. It's a pleasure to be here. Thank you for the invite. I don't know at what age I became a grandee. I'm slightly uncomfortable with that, but there it is.
No, let's be clear. There was an earlier draft where I put veteran, and I thought you would be deeply uncomfortable with that.
Veteran I am. Grandee, I'm not sure. It always seems like something to aspire to, Robin.
I disagree. I think you've already arrived. Look, you're the CEO of Accelerant. I normally do my research with these things, and I have a little go at explaining what Accelerant does. I'm wimping out this time. I think you'll do it so much better than me. Tell us what Accelerant does.
Sure. From the perspective of the people that we serve, what we do is we connect those independent specialty underwriters. They're usually in MGAs or MGUs. We connect them in as frictionless a way as possible with risk capital, where we deliver analytics and transparency and quick, clear, transparent analytics to both sides of the value chain. Now, Robin, how we do that, because you're an industry grandee, you know that it's incredibly complicated, all the regulatory hops that we take care of. But the point of the risk exchange that we operate, two-sided platform that makes all that complexity disappear for the users of the platform.
Well, this is not your first time on the InsTech podcast either. So we had you back in April, probably bang on 3 years ago. The business was going well then. Apocryphally, it's still going from strength to strength. Give us an idea of progress over the last 3 years.
Sure. Indeed, we're now serving over 200 of those MGAs and MGUs in, I think, over 20 countries. The premium throughput on the risk exchange is about $3 billion annually now. We're sharing that with a number of different risk capital providers, whether they be insurance companies, there's, I think, 14 that are participating today, reinsurers, or institutional investors, of which there are many. The way we think about it is because we're a marketplace that gets adopted by both sides, and because we deliver a win-win for both sides, again, the MGA and the risk capital, it's really easy for both sides of that trade to adopt us and say, geez, the platform makes us both better. Why don't we transact on the risk exchange? And I think that's one of the reasons, Robin, why the growth has been really pronounced. It's because we're not displacing other competitors. We're re-platforming that book of business onto a modern, transparent exchange where everyone has the benefit of great data and analytics. So it's a win-win for both the risk capital and for the member MGA. That explains a bunch of the growth, Robin, at least in my view.
Is it all the same platform? So it doesn't matter what country you're playing in. You can do this in the UK, the US, France, but everybody's using that same common platform.
So there are about 13 compliance people that work for some part of Accelerant right now that are nervous as hell about what I'm about to say. And I guess what I would say is there are some laws, rules, and regulations in the various territories that require slight differences. Those, I think it's fair to say, are transparent to the users.
In terms of MGAs and MGUs, what is it you go after? What attracts you? I suspect, given what you do now, there's no shortage of inbound inquiries. What attributes do the ones that you pick have to have?
The first and foremost is character as people. That comes before business, women or men. That's by far the most important thing. Difficult to gauge, but Normally, there are reputations that precede all of us, et cetera, et cetera. So it's character is the first thing. Industry participants will know what I mean when I say this. In your heart, I think you're either an underwriter or a broker. We look for MGAs that are run by underwriters in their heart. We look for underwriters that participate in a specialty space where they've got a particular niche. Usually it's both, but it's always something about distribution and something about risk selection and pricing. After that, the accelerant specific things is you have to be prepared to be completely transparent. So whatever data you collect, we get to use to help you, but you have to be prepared to be completely transparent. And our agreements are designed to be very long-term, which is very atypical in the market. Our MGA members, when they become a member, they get a 5-year capacity commitment from Accelerant. And there are commitments that they make to us to also be long-term with us. So that's the description. And you'll note that I didn't talk about underwriting appetite. And the reason I didn't talk about underwriting appetite is the wonderful thing that all of us at Accelerant have learned, first and foremost, in the past 6+ years, is, boy, did I not know much in terms of all the niches there were out there. If someone told me I was going to be writing or participating in writing surety bonds for small solar farm hookups to the grid in Spain, I would have said, what? Turns out it's really interesting business. So we think it's very important to keep an open mind. We think it's very important to remember who the expert is in this, right? The expert is that MGA that we're supporting. And we only have a few hard and fast rules. And one of the hard and fast rules that comes up all the time is we don't think our job is to take on a ton of natural catastrophe exposure of whatever kind. So we tend to avoid that business, but virtually everything else we try and listen with an open mind.
Plenty of other people doing that. My job was made last week because I was given detailed exposure to an MGA just setting up now insuring gun dogs. So
Very interesting.
Yeah, I got a detailed analysis of specific risks associated with working dogs on Exmoor and whether or not it was a sort of thing I could help get capacity for. Anyway,
have them give us a call. There's nothing better than when a hobby can be combined with work.
I'm just looking at the component parts of Accelerant, thinking you got the MGAs, MGUs, you've got the capacity provision, and then you sit in the middle with the platform, and you also provide a range of what I call central services. So you're sourcing things which you then make available to your participating members. What sort of things sit in there? What's the thinking?
Our mission, right? Our purpose is to make the businesses of our member MGAs and our risk capital partners more valuable. That's the reason we exist. If you have a mission like that, really other focused, and it's really ingrained in the culture, and all 465-ish of us really believe in it, what you're clearly after is what are their biggest pain points on the MGA side. Biggest pain points are quite often the services that they have to source, data, exposure data, how to use that exposure data. Technology has gotten very cheap. I think they should say technology has gotten cheaper because still many of our MGAs struggle with the scale to invest in how do I use all this data and analytics. So that's by far the first primary thing that we hear is it's the analytics and the expert service model that goes with the analytics. We've got a group of really talented, experienced underwriters that are there to help the experts. The MGAs are the experts. We try and do things as mundane as group buying of various services to things that are as tailored. We'll have what we call operating partners that go in and help them with their technology setup, just how they operate the business. So anything we can do to make that business more valuable, we do, is sort of our rule of thumb. On the risk capital side, what do we deliver to them? We deliver curated portfolio. That's really what they want. What they want is a way to get to this specialty business that's so diversifying from their other larger risks or their capital markets bets that it's incredibly valuable. And what we deliver is a platform where they know exactly what they're on the hook for at any given moment. And that is incredibly valuable because it increases trust. And when trust increases, velocity of transactions can increase, and effort goes down. And we're able to give those risk capital partners a portfolio business that costs them about half as much as it would cost to do it themselves. That's pretty compelling, right? When I ran various insurance and reinsurance companies, if somebody said, hey, I can cut your G&A by 50%, I would have ripped their arm off.
We're an acronym-free zone, G&A.
General and administrative expenses. I apologize, Robin.
Don't you worry, you're not the first. We won't be the last. Now that I've got a grandie, I'm going to move on from Accelerant and try and pick your brains about the market as a whole and how you see these sort of various trends. And first, let's talk about the gradually softening market. So we've had 6 years of a hard market. It depends on who you talk to, but most people would say it's softening. When you look ahead, does that change anything about what you do? Do you see it's an opportunity? Is it a threat?
So when you're a cost leader and you've got like a 50% cost advantage, look at the gradually softening, in some areas not softening, Robin, but you look at the gradually softening market with a pretty sanguine attitude. We're pretty confident that we can deliver high teens return on capital to our risk capital providers for the foreseeable rating environment. Now, Robin, keep in mind when you're talking about small to medium-sized risks, they don't see the peaks and the troughs that all the exciting stuff sees. So when you read the headlines, rates 40% up or 40% down, that doesn't happen in the small business space. That's more the reinsurance space or the big industrial risks space. The business on the Accelerant platform, one of the ways it diversifies is I think it diversifies across cycles. It's a really stable book of business. Our loss ratios haven't gone down by 20 points in this market, nor did they go up by 20 points in the bad market. It's pretty stable stuff dominated by the expense structure of the industry. So if we can unlock, which we think we have, if we can unlock that expense structure of the industry, it's an area, specialty insurance broadly, that I think presents opportunities across market cycles.
The benefits of diversification and having a very efficient operating model.
I think that's right. 225 different products, 20 countries, and a 50% expense advantage. Yeah.
Guess what? If I'm looking at the big trends, I'm inevitably going to want to pick your brains about AI, particularly generative AI, soon to be agentic AI. That's one of those things which, unlike blockchain or something else, I don't feel like it's threatening to deceive. I think it's here and it's here to stay, and it's sort of going to change the industry. How do you see that through Accelerant eyes?
It's changed Accelerant already, fundamentally changed our jobs. It's changed how we do what we do. It's changed what we're able to do. Let me give you a couple examples. If you think of it, the ingestion side is our interaction with the MGAs. AI has allowed us to become much more adept at that data ingestion, right? Self-healing or self-correcting ingestions as things change or would normally break, they fix themselves. That's what allows us to have, I think it's over 40 million rows of data, over 16,000 unique attributes. We're adding 1.4 million rows of data across these products each month. We wouldn't be able to do that without AI. Trust me, we've tried. So has the industry, right? See Blueprint 2 and 1. So then you move on. Okay, the data is ingested. Now what do you do with it? AI probably is like the big brother who's really good at sports compared to the little brother. And the little brother is machine learning. And I think in the middle there, when you're trying to optimize your portfolio and you're trying to grow the good bits or the best bits, and you're trying to shrink the worst bits, a really well thought through machine learning process, we would argue we get more value out of that than AI, all right, as we're doing portfolio optimization. What AI allows us to do, and one of my colleagues, Kenny, actually just had a post on this in LinkedIn recently. What AI allows you to do is experiment really fast on your hunches before you build something industrial strength from a machine learning perspective. But in the middle of that chain, what are you doing? You're optimizing your portfolio in a way that you've never been able to do. And the platform allows you to deliver those insights to the women and men at the coalface, right? The MGA underwriters saying, hey, write more red ones, write less blue ones. What is the impact of that? The impact of that on some portfolios has been like 5 points of improvement in loss ratio. Our average member annually has grown at something over 30%, just organically then. And the reason they can grow like that in a small to medium-sized risk market is because they're getting analytics about push here. This sub niche is incredibly profitable. So that's the underwriting selection, the portfolio optimization. Next, you get to claims. claims, one of the stars would be using, this is AI, the large language model, to look at the claims handler's notes, because of course a modern claims platform will have all of that data. It won't just be the structured data. And you have the large language model look for the areas, the claims that have the best likelihood of recovery. We think we've driven a point in loss ratio improvement across the portfolio by better guiding the team that works on those subrogations or recoveries on which claims to look for. And then all through this whole process, what is happening increasingly at Accelerant, and it's a big part of why we're going to become ever more efficient, is we're automating what used to be human steps, Robin, where someone would receive data, manipulate it using their expertise, but we weren't painting pictures. We weren't doing artistic interpretations. A lot of it was the same thing. As you start to automate those things and you start to have our 450 colleagues start working on the most important stuff, just things start to sing, right? We are able to onboard a new MGA member in about 12 weeks. And it's because of that whole process. And we're able to drive insights from both directions. So I'm sorry, I got a little excited about it.
Very interesting. I'm going to send this to my younger brother. Say, did he know that I was AI, the elder brother good at sport, and he was machine learning, and see what he has to say about it. I really like that analogy. I'm just going to push just one more question on this whole thing about Gen AI, and I'm now looking further ahead. I was very taken with an article that Paul Carroll wrote in Insurance Thought Leadership a couple of weeks back, where he said, rightly so, everybody is concentrating on the ways in which you can get an instant impact, and you've done better than most there in outlining what those are across the value chain. He was saying, but you also have to have a part of you thinking big, thinking really big, as he put it, because this could fundamentally change the insurance business model. And he says, of course, I don't know how it's going to change the business model. If I did, I'd be a billionaire. I wouldn't be messing around doing thought leadership. Are you in that camp? Do you see, looking ahead, this fundamental shift in the way we deliver insurance?
The way I'd start with that question is I would say, do you recall how the grandparents always noticed how the kids grew up because they had intermittent exposure to them, whereas the parents, it was continuous? When we're all staring at the industry, we wonder how quickly is it changing? Robin, I'm going to say that not only do I agree with that article, I think it is occurring. So think of the disaggregation we've seen in the past 10 years. Think of the move from standardized products to specialty products. Think of the influence of InsurTech. They get a bad rap because they've done a ton of stuff and they were leading edge, bleeding edge. I think did some really important things. So I believe, and boy, is this self-serving, so you would expect me to say this, right? I believe that we have seen the business model change, and it's going to be a risk exchange, just like every other significant type of risk that gets traded in the world. Everyone, or maybe I'll be more cautious. I have not found, and I've looked, a significant risk that isn't traded on an exchange where you have capital providers that see transparent risk, and you have originators that are the experts on the individual characteristics of the risk. And in between is technology, making it fast. And AI is going to speed it up so fast that when we think about Accelerant, the only thing we're sure about is we're going to be the rails on which specialty insurance runs. I can't tell you what that's going to look like 3 years from now, 5 years from now, 10 years from now. But here's what I know is we're all going to be exhausted. And the reason I say we're all going to be exhausted is none of us are going to have any easy parts to our job anymore. The only time the machine is going to bother a human is when they say, whew, this one is really difficult. You got to make a call here. And imagine your 10-hour workday filled up with only the most difficult calls. I think we're all going to be exhausted. So I couldn't agree more with the premise of the article. Self-servingly and perhaps presumptuously, I feel like Accelerant and the rise of MGAs and the rise of institutional investors entering insurance, I think we've seen the beginnings of it, and it's pretty clear the way it's going to go.
Makes me think of another question, which is, how big can you get? I share your analysis, and I want to know where you were in 2001 when I set out building a platform built to a very similar vision. There wasn't anyone like you articulating it in that excellent way. But assuming you've got that, do you just go on getting bigger and bigger? Is there an optimal size you reach? Is there some way you have to change as you grow?
What's really important in a marketplace is fairness and transparency. I think Accelerant's risk exchange gets bigger and bigger because of the network effects. More data means we're smarter. We can make our participants smarter. That means the insured gets a better product. The risk capital gets a better return. Everyone in between presumably does better as well. I will say that platforming the business has diminishing benefits the larger or the more complex the risk gets. It's a little bit why public equities trade in whatever it is, nanoseconds, right? But there's a whole industry of private equity, as we know, which churns over the hard one-off cases. Geez, what do we think about this particular opportunity? Those types of risks, I always say the oil refineries, because could you think of something more complicated? Those complicated risks, do they belong on a platform? Maybe. What's the efficiency pickup? Pretty slight. Because the premiums are high, the uniqueness is high, all the reasons. But for the run-of-the-mill business, I'm going to say 80% of the policies, not 80% of the premium, but 80% of the policies, it should be platformed, just like mortgages are, just like bonds are, just like equity is, just like every significant kind of risk. And so what's the constraint? The constraint is today, the specialty insurance market's about $252 billion in the countries that we serve now. What part of that should be platformed? I think a pretty high percentage, something like 80% of the policies. And I haven't done any work to estimate what that is of the premium. But to me, it just makes sense, right? If you were an insurance company, you'd say, this is much better for me. If you were an institutional investor, you'd say, this is much better for me. If you were a really talented underwriter of a specialty risk, you would say, geez, I'm making a hell of a lot more money. My life is more stable. I have agency. I'm not a cog in a big wheel. Everything's better.
I look at Accelerant, I think you're a bit of a market maker. You set up this business 5 or 6 years ago. There are quite a few people now who see the power of it. Are you worried about a competitive threat, or is it just endorsement of a model that you've already built a business around?
We have been fortunate in that we've been successful. We've had great partners on both sides of the platform. So for someone to emulate that business model, well, you can't say it's a criticism, so it must be a compliment, right? It doesn't do much for us. Do I worry about any of those emulators catching or surpassing us? And I would never say that's not going to happen, because we are very focused on making sure it doesn't happen. And funny enough, the way we focus on making sure it doesn't happen is not by looking in the rearview mirror. We're not looking at them, the emulators behind us. We're looking forward. And we're thinking about what's the next evolution. It seems a lot safer and, P.S., a lot more rewarding to think about what's next. What can we do next for our members? What can we do next for our risk capital providers?
So, Jeff, we always do this. We finish a podcast by saying to our guests, if the audience takes away one thing from listening to this podcast, what would you like it to be?
The parting thought I would have for professionals, underwriting experts, specialty underwriting experts, wherever you work, and risk capital providers, is that the business models associated with the industry have changed. It's just we're standing so close, it's hard to see. So maybe the next time you take your dog for a walk, if you're out with the kids, take a moment to think about how much has changed in your past 5 years, in the past 10 years. And I think what you're going to see is the disaggregation. You're going to recognize the pattern from other markets, from the mortgage market, among others. And you're going to see that disaggregation and this platforming on a risk exchange is something that's better for everyone. And the reason I say all that, of course, is partially selfish, Robin, because if you're a talented specialty underwriter, I want you to call us. And if you're a risk capital provider that thinks this sounds good, I also want you to call us. And if you think you'd like to participate on the Accelerant team, trying to work every day to improve the value of the businesses of our risk capital partners and our members, I want you to call us too. Admittedly self-serving, but I do think things are changing and the future is for change reasonably clear.
Fascinating. You've endorsed my view that you're a grandee, and I've really enjoyed the chat. We've had 3 years gap. and let's have that podcast, which is a way which we can establish in some scientific way the amount by which the business has changed. To your point, it's like getting old. I still think I'm the same guy when I look in the mirror, but I'm actually old now. But I still see the same person. When things change in that way, you don't even know change. And I think there's a lot of that going on. That's a very good point.
And the only thing I'd say, Robin, is first of all, thank you for having me again. Second of all, I think it's Moore's Law, right? There's something about the cube. Maybe 3 years is too long. Things are moving pretty fast at Accelerant. I'd love to be back in a year or so, and let's talk about what we've achieved on behalf of our members and our risk capital partners on the risk exchange.
It's been a pleasure. Well done with everything you've got. Thank you very much for joining me.
Thank you. Cheers.
Well, if you've made it this far, then I'm pretty sure you found that as interesting as I did. The InsTech podcast comes out every Sunday morning, where we spotlight the latest news, leading voices, and freshest updates across insurance that you need to know about. If you would like to take part in these conversations, head to www.instech.co to find out how you can join our network and be a part of the insurance intelligence for the curious.